Welcome to the Gold Market Review for February 24th, 2026. This is your professional report on the current state of gold. We begin with a market overview, setting the stage for gold's performance amidst global economic signals. As of February 24th, 2026, gold prices are experiencing slight retreat from recent multi-week highs. Gold is trading near $5,148 per ounce, with profit-taking and a firmer US dollar contributing to the slight pullback. The metal has oscillated within the $5,128 to $5,237 range, indicating persistent safe haven demand supporting its price despite mixed macro signals. Next, we examine the macro indicators and policy decisions that are central to gold's trajectory. A firming US dollar has put some pressure on dollar-denominated gold, while US Treasury yields holding in the low 4% area signal policy stability. Real yields remain a key driver of gold's opportunity cost. Federal Reserve officials continue to adopt a cautious, data-dependent stance on potential rate adjustments, leading to investor uncertainty. Markets are awaiting crucial inflation and labor data. Gold's sustained resilience near elevated levels suggests strong structural demand persists, even amid the current policy ambiguity from central banks. We now turn to the technical picture, looking at momentum and key price levels. Technically, gold shows range-bound behavior rather than a strong trend. Momentum indicators like the Relative Strength Index and MACD are hovering near neutral, consistent with consolidation after a recent rally. Key support is established between $5,120 and $5,140, with current resistance levels ranging from $5,180 to $5,220. Sustained breaks above or below these ranges will signal the next directional move. Finally, we consider the underlying structural demand and the influence of geopolitical capital flows. Physical demand remains supportive, driven by strong import activity in Asia and continued central bank reserve diversification. These long-term accumulation trends help sustain gold's valuation. Geopolitical uncertainty, including trade policy and Middle East negotiations, encourages diversification into defensive assets like gold, reinforcing its safe haven status. To summarize our findings for today's gold market review, gold is trading firmly above key psychological levels, buoyed by macro drivers, structural demand, and persistent geopolitical risk sentiment, underscoring its role as a strategic asset. Confirmation of the next sustained trend will likely depend on forthcoming economic data and further guidance from the Federal Reserve. Please remember that this content is strictly for educational reporting purposes only and does not constitute financial advice. Subscribe for our daily professional gold market updates.